Welcome back to another video. Today we're going to be going over one of my favorite investments, Alibaba Group Holdings. It's actually the largest position in my portfolio. We're going to look at the fundamentals and break down some technicals and see where Alibaba is going. And it is definitely breaking out, in my opinion. Alibaba is a long-term hold. Let's discuss why. Welcome back to the channel, everyone. My name's Adam, and on this channel I talk about stocks as well as cryptocurrencies and reveal my portfolio periodically. And feel free to check out the free resources down below, like the link to my Discord group. So Alibaba has been on a bit of a tear. Over the past 5 days, it's up by 8% to $228. And just on the last trading day on Friday, it jumped by 4.6%. And I think, based on the technicals, Alibaba has finally seen a breakout. So this is a falling wedge type pattern that I sort of drew like simple lines here, where the share price basically oscillates between the top and the bottom of the wedge, and it sort of gets closer and closer. And so basically what this means, that two things could have happened if we're just going off of this falling wedge trend line. One is it could have just oscillated more and more here between the trend lines and kept getting smaller and smaller. But as we can see here, this green candle, it sort of broke out of that level. And I think that this breakout level is crucial, right? And we see this sort of nice fishhook pattern here, meaning potentially that the stock could go even higher. And I think it's unlikely that the stock will continue into this falling wedge type pattern, but just note that anything is possible. For example, if any news comes out saying that the US, for example, blacklists Alibaba, and so American investors can't buy Alibaba, then the stock could go right down, for example. But I think that this breakout pattern is crucial. And now what acted as a resistance here at like around the 240 level, which I think is a key crucial level, could potentially act as the next support if Alibaba continues this trend in the near term. Okay, so $240 will definitely be a critical level for Alibaba to reach, and hopefully instead of acting as resistance, it can act as support. And again, but I just like to see that it's going out of this breakout pattern. And then again, we can see the next level, if 240 acts as a support instead of resistance then, and if it breaks from that level, then I think the next key level would be around the $270 mark, which will act as the next resistance / support level. Just based on the fundamentals, I think Alibaba should be trading at like a minimum $300 a share. I mean, I think that's just a conservative estimate on my part, and that's, factoring in the US-China tensions, which I think they want to, they're easing, and we're going to look at some news and look again at the fundamentals to see why Alibaba is such a great investment and why I'm so bullish. And then past that, of course, the next key level is probably around the $320, $310 level at around right here. So again, if it crosses this $240 level, like that could be a key moment, and that 240 could act as a support instead of a resistance. But we'll just have to see what happens now. But I think that because Alibaba broke out of this falling wedge pattern, this could be a good sign just based off of the technicals. So yeah, if you enjoyed that, please definitely be sure to hit the thumbs up button. And so there's a couple of key points that this Seeking Alpha article points out. So the People's Bank of China decided to be more overt with its actions last week rather than relying on the message about its commitment to keep liquidity ample, defying the skeptics. So this is really good news for Alibaba and other Chinese internet stocks such as Baidu. And basically what this means is that they're going to keep liquidity on the table, keep interest rates low. And this is mainly a concern for Ant Group, which the IPO of Ant Group was thrown away by the Chinese Communist Party because of its concerns over it not being able to, not having enough of stake in the game, so they want it to act like more like a regular bank instead of this high-tech fintech type company. And this is partly the reason why Alibaba stock over, you look at the past 6 months has sort of been falling from $270 to down 22% to its lows near $206. Okay, so one, again, the Chinese Communist Party, they discarded Ant Group IPO. Two, Jack Ma spoke out against the Chinese Communist Party, saying they're more like pawnbrokers than financial institutions. And of course, you don't want to speak out against the big Chinese Communist Party. And three, China took an anti-competitive monopolistic probe into Alibaba, and they fined them a lot of money, but it was just, in the long term, it's a drop in the bucket, but that hurt their earnings for 1 quarter, and that's also why Alibaba stock was down, okay? But this seems to be now in the past, and we can have a solid growth foundation for Alibaba, not only on its major e-commerce side, but also in its cloud computing business, which we're going to go through the numbers, and it's just amazing, okay? It just reminds me of how Amazon was in the earlier days with the amount that they're growing their revenue. Not to mention the rise of the Chinese middle class. So in the tussle of the trove of consumer data, Ant Group has averted the worst case scenario with the formation of a joint venture with state-owned enterprises. So this is good news because now Ant will not be controlled or not fully controlled by state-owned enterprises, which of course work with the CCP. And they talk about Baidu here. They were the first to actually put autonomous EV robotaxis on the road. I'm also an investor in Baidu, and again, I believe in them as well. And I think that they're somewhat even better valued than Alibaba, but I still think Alibaba is just the key investment for me right now. So somewhat supportive of the market sentiment last week was perhaps the US and China heading towards more reconciliatory stances. The bark is worse than the bite. Revelation bodes well for investors in Chinese internet stocks. So it's no surprise that US-China tensions are quite high. They're two superpowers that are sort of competing for market dominance and market share. And right now, Joe Biden is not necessarily doing anything to ease the tensions, but he's not trying to aggravate them as well, just trying to keep them at bay. And the worst thing that I think could happen is for the US to blacklist Alibaba and other Chinese stocks that they've done so far. But I don't think that they want to do that. And I don't think that they're going to do that because, Alibaba is not really a threat to US security. So they only blacklist Chinese companies that are an actual threat, in my opinion. That's what they've done so far. And you don't want to keep American money away from Chinese investments, and that could just increase the tensions even more. So that's just my stance on it right there. So, but without risk, without a certain amount of risk, you can't expect to reap tremendous rewards that I think Alibaba stock has for the future. So the geographical and business diversification of Futu would go a long way to shock-proofing its prospects and serve as a model for Alibaba to follow, even as an SEC leadership overhaul suggests a substantially diminishing delisting threat for US-listed ADR. So that's, again, what I talked about. I don't think that there's an incredible threat of Alibaba to US national security, okay? It's just like an e-commerce giant. So let's talk more about the fundamental factors as well as some numbers like the price earnings and forward price earnings ratio. And we're going to compare that with Amazon and see which stock is a better buy. But first, again, I just want to point out the Chinese middle class is one of the fastest growing middle classes ever. And this just shows you the wealth of China and China to come. Okay, so based on Pew's income band classification, China's middle class has been among the fastest growing in the world, swelling from 39.1 million people, so 3.1% of the population in 2000, to roughly 707 million people, so 50.8% of the population in 2018. This is tremendous middle class growth, and why this matters is the higher the income of the middle class, the more that they're able to spend on goods and services, and the more they're able to spend on goods and services, the more likely that they're going to be using Alibaba for their e-commerce transactions. Okay, so I mean, just basically for any business, the more cash you have coming into your operations, the better it is. And just Alibaba happens to be centered in the e-commerce and cloud space, which really bodes well for the increase of the middle class, as more money will just get funneled into it. And speaking of their cloud growth, Alibaba cloud growth outpaces Amazon and Microsoft as Chinese tech giants pushes for profitability. And last quarter, they actually reported profitability in their cloud business. Okay, and this just reminds me what Amazon has done. Okay, first they started in the e-commerce side, but now they're expanding to, I mean, Whole Foods. They help Whole Foods. They have like a huge profitable cloud business, and so Alibaba is just doing the same thing. And you look at what Amazon stock did, and I think that's where Alibaba stock is going to go. So Alibaba reported cloud computing brought in revenue of 14.89 billion won, or 2.24 billion in the 3 months that ended September 30, a 60% year-on-year rise. So this is a fast-growing company, especially on their cloud business, and that is what I'm really, really bullish on, okay? And that was faster than Amazon's Web Services 29% year-on-year revenue and Microsoft's 48% growth in the September quarter. Alibaba reiterated that its cloud computing division is likely to become profitable for the first time in its current fiscal year. So, that's just so exciting to me. And let's just compare some numbers right here. So, you look at the trailing PE, 27, forward PE of 19. That's incredibly low. That just stuns me for the type of growth that they're doing. Let's compare that to Amazon. And I know Amazon is an American company, but one, it's not growing as fast, and two, it is decently richly valued. So trailing PE of 64, forward PE of 47. So let's just compare forward PEs. Forward PE of 47. Compare that with forward PE of forward PE of 19. So less than half of the forward PE that Amazon has. And I mean, this is just like a no-brainer. I'd much rather put my money in Alibaba than Amazon. And you look at the growth factors, Alibaba is growing their revenue more than Amazon is. So 2022, they're growing revenue by 30% or expected to, based on 40 analysts. 2023 expects to grow revenue by 20%. So 30% and 20%, 2022, 2023. And so here we can see 2022, they're expected to grow 18% versus the 30%. And this is just for 2022. So we compare 2022 to 2022, and it's 30% versus 18%. And this current year, they're expected to grow 27%. So, not bad again, but still, I just think that like Alibaba is a faster growing company. They have a more attractive multiples. If you own Amazon stock, I think you should own Alibaba stock. It's basically a similar business model with a faster growing economy in China versus in America. Okay, so those are just my 2 cents, and that's why I own Alibaba stock, and that's why I really like Alibaba stock, just based off of all of these factors, okay? And at the end of the day, I think the threat from China and it probing into Alibaba and finding them is more like a slap on the wrist in the long run. I don't think the CCP wants to next level, go down and just like take away what keeps Alibaba profitable and what makes the Chinese economy running. Okay, so they take away businesses like these, and they basically cripple themselves. So I just like Alibaba for the long run. I like it at $228 long term. I think it should be trading at least above 300, and potentially in 5 years from now, I can see it being a $500+ stock, and I might even get into some option plays for 3 years down the road, just based off of, again, Alibaba being such an attractive multiple right now. So take care, everyone. I hope you enjoy this video. All I ask is that you give it a thumbs up, subscribe to the channel if you enjoyed it, and feel free to, again, check out the Discord link down below, as well as some links to join my channel if you would like to support the channel growth. And Wealthsimple, if you're Canadian, you can earn up to $25, 2 free stocks, if you join Wealthsimple and you're Canadian. So yeah, take care, and I'll see you in the next one. Peace, guys.